Do day traders actually make money? Are they actually successful? Let's find out. Put them up, guys. It's time to crush the wealth gap. Hey, what's up, guys? My name is Owen Bonsall, and this channel is all about getting the mindset and the knowledge you need to get ahead in life. And today we're talking about day traders. Are they actually making a lot of money? Because you see a lot of day traders everywhere on YouTube, and they seem to be getting a lot of money. So I just wanted to take a look at what the studies show. And so I'll go ahead and link the research below in the description. Okay, the first stat that I found was from researchers from UC Davis, UC Berkeley, and Peking University. According to their research, 80% of the day traders quit within the first 2 years of trading. That means every single day trader that starts day trading has an 80% chance of quitting within the first 2 years. That is dismal, guys. What's worse, if you take a look at the entire population of day traders, 40% quit within the first month, and an additional 47% quit within the first 3 years. And lastly, another 6% quit within the first 5 years. So that means only 7% of the day traders that start actually stick around after the 5-year point. Now, when it comes to performance of the day traders, it definitely seems that their past performance will indicate their future performance. That means if a person is losing money on average all the time, they're likely to lose money on average in the future. If a day trader has been making a lot of winning day trades in the past, they're likely to make a lot of winning day trades in the future. So that right there is huge, guys. If your friend or somebody you know has a verifiable account and you can see how they've done it in the past 3, 5, or 10 years, that's what you want to see when you want to talk to a day trader. You want to make sure that they actually have a track record of making money. Guys, when it comes to stocks, I know a little bit about this space, and I know for a fact that people tend to hide their losses in the past, and they definitely overblow their gains in the near term. You'll often notice that people talk about percentage gains versus actual dollar amount gained. To give you a simple example, a gain from $1 to $2 is a 100% return, but it's only a $1 gain. When you're speaking to a day trader, they will focus in on the percentage increases in this percentage gain picture that they're painting for you. You also want to make sure that they're actually looking at a window larger than a few months or weeks. You want to look at few years. How have they actually done within 1 year to 3 years to 10 years? That's because only 1% of the day traders are actually predictably profitable. That means 99% of the day traders are not predictable in their profitability. 99% of the day traders have a really unpredictable win and loss ratio. That means one day they'll gain a lot of money and the next day they could lose a lot. And this cycle could continue with no predictability in sight. So out of the day traders that survive, that actually continue to trade, what's even more baffling is that 10 years of negative performance doesn't deter them. Studies show that they actually ignore negative signals and continue to day trade in the future, even with a 10-year history of losses. That to me is just incredible. And on average, every single year, 1.6% of the day traders are actually profitable. 1.6. That means 98.4% of the day traders are actually not profitable. They're actually losing money every single year. And those 1.6% traders that are actually profitable account for 12% of the trading volume. That is crazy. That means they are heavy traders. Something tells me that AI and fractional trading must be involved in this. When it comes to risk management, studies also show that traders that have a low net worth but high net worth aspirations tend to be in riskier stocks. Reading between the lines, I think what's happening here is that traders are really looking for stocks that are really low quality or penny stocks, and they're trying to hit it big. And guys, last but not least, but also maybe the most depressing stat of all, an average trader will actually underperform the S&P 500 by 1.5%. And that's not the only thing. An active trader will actually underperform the S&P 500 by negative 6.5%. That means the more you trade, the more you lose. Man, I am not instilling confidence today. So guys, there you have it. These are the few facts that you should keep in mind when you're actually looking at day traders on YouTube. If you are considering day trading, that you look at these studies, go read them. I'll have links below so that you can go ahead and get educated. I can tell you guys from my own experiences, day trading is a mess. There are so many people losing money left and right. Far more people, looks like about 98% of us, are actually okay to just go ahead and invest into something like an index fund and just ride it out for the entirety of your life. So if you're considering being a day trader, then make sure you have a account where you are just invested in the entire market. Guys, diversification and buying the entire market is a great way to bet even against yourself and your own foolishness. Sure, if you want to be a day trader, if you want to trade on margin, go ahead, do whatever you want. But I really suggest that you go ahead and put some money into the S&P 500 or some other market index fund. Because at the end of the day, you want to make sure that you get there for sure and not get there by chance. All right, guys, this has been fun. If you want to get started in index investing, go ahead and take a look at my other videos on my channel, and I'll see you next time.